Welcome to the Mad Profit Podcast, where we interview active investors, entrepreneurs, and experts who left corporate jobs to buy or start successful ventures and live life on their own terms. Listen to their stories, learn from their experiences, and heed their advice so you too can create mad profits and the life you've always wanted. And now, here's your host, Laurent Truc.
Welcome back, everybody, to the Mad Profit Podcast. I'm excited today. We've got a guest, a special guest. His name is Sam Leslie, and he is a self-proclaimed business acquisition investor. I love that title. It resonates really well with me. So, Sam, welcome to the show.
Thanks, man. Really great to be here.
Appreciate you taking the time.
Absolutely.
I've been looking forward to this interview. Oh, you know that. I've been hounding you for some time to get on a call together. Obviously, we're in the same space, and we just share a lot of common thoughts and views on investing and business investing. So looking forward to spending some time, getting to know you a little bit better, and sharing some of your wisdom with the listeners today.
Great. Sounds
awesome.
Good.
So maybe we can start with you. Can you tell us a little bit about yourself and how you got here?
So let's go all the way back. 12 years old, running a landscaping lawn maintenance company. Knew I always wanted to own businesses. I knew it. I don't know why. I just knew I wanted to own multiple businesses. And of course, wealth came along with that, but I knew I wanted to own multiple businesses. So my dad liked to sit down and kind of help me plan that out. And I said, well, I want to sell my landscaping company for $1 million. Well, about 15 years later, I was still running it.
Wow.
And didn't sell it for $1 million, but did sell it and bounced around for a little while, just trying to find something else. And I ended up taking a job with a pest control company, and I got sick all the time.
Oh, wow.
Because of the pest control products. I would shake, and I was nauseated, and it was. I started looking it up online, and I was like, I think I might be getting a little bit of the poison on me or in my system. And so, I had 3 kids at the time, and was coming home with that stuff on me, and realized that there had to be a change. So I took about $2,000 and started a company called Organic Pest Solutions, which still runs in Greenville, South Carolina. It's been about 9 years now. And we used natural and naturally derived chemicals. So business is in my blood, man. It's in my blood. So fast forward to 2015. My dad runs Organic Pest Solutions, and then I invest in other businesses. So 2015, I found Ace Chapman. We were both friends with him, partners with him, or have been partners with him in many deals, and fantastic guy. And I found him in 2015 and joined his course and learned how to buy businesses, because I knew that I had to have somebody teach me. There's just really not much out there on how do you buy online companies, how do you buy offline companies. I had sold my business, and looking back on it now, like, it was a very creative deal, and I didn't really realize that. And it worked out really well, but Ace kind of took me down the path. And so within 6 months, 6 to 8 months, I was in 4 deals, and the rest is history. And now I'm partners with Ace in Dealmakers Institute, which is our coaching, mentoring, business buying platform. So very excited. And now my focus is really focused on, or switched to, offline businesses. So both online and offline, I'm cool with both. Just looking for value and where I can increase value and hold on for cash flow. So that's
very cool. Very cool. God, so many questions just off the top from that. First of all, that's amazing that at the age of 12, you started a business and you hung on to it for 15 years. I mean, most people, my son's 12 now, and I'm just trying to convince him to go and grab that shovel to make some extra money. And it's a task. So kudos on the tenacity just for holding on to that business for so long. It's amazing.
Yeah, I mean, it provided for me and my family, provided for me through college, and provided for my family until a little way after college. So business can, I mean, business can provide for you better than a job can.
Mm-hmm.
And it's a lot more flexible too. So, I mean, when I was running that company, I'd work 3 or 4 days a week, whatever I wanted to do. If I wanted to work 6 days a week, I'd just spread it out. If I wanted to work 14 hours a day, I'd do it and take a 3-day weekend. So business is amazing, man. It's fantastic. So.
Very cool. So you started off with that service business. The
Mhm.
pesticide was also a service business. At what point did you want to get into online business? Because ACE's program was really focused on online primarily, right?
Yes, at that time it was, because the multiples were so low, man.
Mm-hmm.
So offline companies were still a higher multiple or higher price for the cash flow versus the online businesses. So you could buy an online business for a 2 multiple all day long in 2015 versus a 3 multiple or a 4 multiple for an offline business. And now it's inverted. What got me into it was I knew in probably 1998, 2000, I was about 18 years old and knew that the future was online. I just didn't know how to get into it. I grew up deep in the South in a very non-technical area and just didn't know how to get into things. And I was focused on service businesses. So kind of missed the boat as far as kind of the dot-com boom, which might've been a good thing or a bad thing. But I kind of missed the boat on that, but I knew that the future was online and it still is, but the opportunity for value is flipping now. So, yeah.
Very good. So, talk a little bit about some of the first deals that you got into. Were you always looking for value from day one? I mean, there's the whole storyline out there of find your passion. It'll make it easier to focus on the time that you need to grow that business. Then there's the other train of thought of it's about value. Forget, find the deal that makes the most sense for return on investment, have an exit strategy. Where did you come into this space? Like, what kind of headspace were you in?
I was in the model agnostic headspace. So
okay,
didn't care what model it was, just as long as it made money consistently. And ended up buying a SaaS, software as a service company, and honestly jumped in and got over my head as far as the maintenance goes of a SaaS company, coding and all that. I was inept at that, and was basically trying to do it myself, which we don't teach that. We outsource to professionals, and got a little bit burnt initially, and until I kind of learned my lesson. But so I jumped into a SaaS company, which, really turned out to be a great decision, because I bought it at a 3.1 multiple, and now SaaS businesses are selling for routinely 4 and 5s.
Wow.
Just saw a drop shipping company selling for a 3, and then I saw an affiliate site selling for a 4.8.
Oh my God.
So like the multiples are just going up, and brokers aren't returning calls. Like we talked about, it's a seller's market.
Yeah.
So many buyers are out there. The government here in the U.S. is incentivizing, buying businesses through Small Business Association 7 alpha loans. And so they're only requiring 10% down. So there's a lot of people out there who can buy $1 million business because they got $100,000 in the bank. So they're getting pre-qualified and then jumping on these deals, whether they're deals or not.
Yeah. It's funny how quickly that's changed. A year and a half ago, there was no financing in the space. It was so hard to find any money. And I live in Canada, and the government here does not provide any funding for this stuff, which is crazy. We're such at a disadvantage compared to you guys. And even you though, it's the SBA, but there's not a lot of banks that are jumping on board. I think Stripe now is coming up with a program where you can borrow some money for some of these purchases, but it's taken a long time to get there. It's pretty crazy.
Yeah, I think that the banks are really realizing that these are as liquid an asset as you can get, compared to stock.
Mm.
because you can buy and sell them. I mean, it's with websites, you're able to say, if you price them appropriately and you have good books or fair books,
Yeah.
they'll sell.
Yeah.
They'll sell. So it's kind of crazy right now. But I don't want to get us off topic. I feel like I was rambling.
No, please, please. Tell me a little bit about your view. So now you're talking, and I know Ace and I are both a big proponent of this, about buying businesses. You started off by building them. So your theory as to why build, or why buy versus build?
Value. I mean, 100%, man. I mean, you can buy something that cash flows immediately from day one. There are just way too many opportunities out there right now. 20% of listed businesses sell. So, we're talking about websites selling. Yeah, they sell. They're selling like crazy. But offline companies, 20% of them listed don't sell.
Mm-hmm.
So, why would you start a business when a business over here that's been in business for 20 to 30 years with an established clientele, reputation, marketing has been done for 20 or 30 years, the whole base is built.
Mm-hmm.
Why would you start a business in that space when you can go buy one? So I'm getting less model agnostic because I see opportunity in certain models, service businesses primarily. But in a space where the multiples are getting so high that you can't justify financing, then I could see starting a business in that space and trying to take some market share. But right now, it just doesn't make any sense if you just look at the numbers. So I'm kind of a numbers guy. If it doesn't make sense numbers wise, I'm not going to do it. And starting a business just doesn't make any sense when you can buy one that cash flows right away.
Very good. Very good. So you've migrated from online. Are you fully offline, or it's, like you said, deal agnostic? Depends what comes your way.
I'm pretty much deal agnostic. Right now, I'm interested. So if it's going to be an online company, I'm not going to run it. I'm either going to buy it and put a CEO in place, or buy one with a team,
Mm-hmm.
or I'm going to just be a minority investor, or provide some debt financing or something for somebody who's going to buy it, because I don't want to operate it. My heart is kind of in service businesses, offline businesses, because that's where I came from. So
Okay.
it's like putting on a well-oiled baseball glove or something. You just slide right in and you know how to use it, and it's really easy. So go where, magnify your strengths. And I mean, I did it for 15 years straight. So I know how the business works, and I know how to just blow it out of the water. So I'm not purely offline, but that's where I see the opportunity. So I'm moving there. But if deals come along, I will definitely invest. I mean, my wife invested in a Canadian cryptocurrency trading platform called CoinSmart.
Okay.
So she's an investor as well. So we invest in online stuff, but that's her investment. That's not mine.
Got it. Do you come in with an exit strategy when you make an investment, or do you see how it goes?
So cash flow is king, man.
Mm-hmm.
Exits provide a surplus of cash flow, which can put you into disadvantage tax-wise in the United States, depending on how you have it structured. So holding on to your investments is a really good idea, and just growing them to the amount of cash flow that you want. So, but you always have risk when you reinvest in a business, because businesses can be risky, and that's why we buy businesses that have been around for a long time, right?
Mm-hmm.
They've already passed that 5 years, hopefully maybe even 10 years of the higher chances of failing. So I do come in with an exit strategy. Usually it will be for the service businesses where I'm heading right now, is buying in the same vertical, in a geographic location. And basically dominating the space. So come in with business 1, business 2, business 3, maybe plumbing businesses, HVAC, something like that, electrical. Adding on services to those businesses because you're already in people's houses. So you just add on different services, and then you synchronize the software, you synchronize the training, you synchronize even like, you could even synchronize like the type of trucks or cars or vehicles you're using, the uniforms you're using, keeping those businesses with their own brands, but you've basically vertically, you've integrated them into one business, because you can look at one software and track all things. You're going to the same supplier for vehicles, you're going to the same supplier for uniforms, and then you turn around and you take those 3 businesses, 5 businesses, whatever you bought in that same area, you turn to a private equity fund and you say, hey, this is essentially one business. And you can go from a 3 multiple to now a 4 or a 5 to 7 or a 4 to 7 multiple, and you've created an incredible amount of value just by keeping the income static. So anyway,
yeah, that's amazing.
I hope that makes sense.
Absolutely. So you talked about a couple things there that you look for in deals, right? So if it's a service deal, you're looking for add-on services that you can put together. Age of a business, the older the business, the more stability typically comes with it. Anything else, any other tips that are critical for you when you're doing your review of a company?
Yeah, absolutely. So number one would probably be their online reputation. So a lot of these companies have been, they've been around for 30 or 40 years, and they don't even know they have an online reputation. So like, once I get a prospectus for a business, if I'm going through a broker, or if I'm going direct to the seller, or if I found it off market, then I instantly look them up online, look at their Yelp reviews, their Google reviews, any kind of forum stuff about them, their Better Business Bureau rating, things like that. And I mean, sometimes you'll run across a company with like 5 reviews in 30 years, and they've all been bad reviews, but they've been in one little space from 2012 to 2013, and they got 5 bad reviews, and now they've got a 1 star on Google. Does it make sense that that's a horrible company? No, they may have just had a bad manager or a bad service person during that time, and that's just a question you're going to ask the seller. So it doesn't necessarily turn you off. But first, their online reputation. Second, I'm going to look at their customer base. What kind of data do they have on their customers? Do they just have phone numbers? Do they have addresses? Do they have emails that actually work? Do they invoice people through email? If that's the case, then you know that people are opening their emails from this company. Right. So you got an opportunity to really add on a lot of services and get people to respond to emails. I also look at their marketing. If they're already marketing, I ask them what their cost of acquisition is, a customer acquisition, and then their lifetime value. So the lifetime value of my pest control business is probably, I'd say it's about $1,000 to $1,100.
Okay.
So I can spend a good bit to acquire a customer, right? Because they stay with us.
Yeah.
So if you know your cost of customer acquisition plus your marketing cost, and then see if they've scaled it ever and if it stayed consistent, then you know that you can just pour money into marketing and just grow the business like crazy. So if there's any inconsistencies there, then you just ask questions of the seller. So first, online reputation. Second, customer base. Third, want to take a look at their employees, how many employees they have, how much revenue is being generated by each employee. So basically take the revenue, subtracted by them or divided by the employee, and you know how much value each one is. You need to look at, see if there's too many admin. Do you need to cut your admin? Can you cut your admin salaries? Can you hire VAs? So you're looking for value when you're doing this due diligence, but online reputation, customer base, employees, and then equipment. Does the equipment need to be replaced? If the equipment needs to be replaced, then you're looking at a big outlay of capital, and that actually becomes a deal point, which you can leverage for better terms.
Got it. That's incredibly different from the online world, right? In terms of what to look at and just employees and stuff, physical stuff.
I actually only look for businesses that have management teams in place,
Hmm.
because I don't want to run the business. I want to
Yeah.
be a strategic. I want to be strategic. So I want to step in as the CEO owner,
Hmm.
and then replace myself, and then go on to the next one, and then do that. The vertical integration. So.
Yeah. So is there a size of business for that? Like management teams won't exist on a business that's, $100,000 in revenue. Like what do
Yeah.
you typically shoot for?
So I look at, because business values fluctuate. Oh, because gross revenues fluctuate greatly between service businesses and profit margins. I really look at EBITDA,
Hmm.
not EBIT, not EBITDA, because I don't like to value businesses based on depreciation add backs. And if anybody's got questions about that, I don't want to get too deep into that, but depreciation on equipment can be pretty high depending on what class of equipment it is, and sometimes the brokers will add that back as a cost that you won't incur. And I'm like, no, I don't
Yeah.
allow that. So it's
Yeah.
basically just cash in my pocket that I value
Mhm.
it as. And so I'm looking at businesses between 300,000 and $1 million in EBITDA. And depending on how much equipment they have, how long they've been in business, management team, all that kind of stuff, their valuations can fluctuate greatly. But we're looking at probably between valuations of about 750,000 on up to 1.5 million.
Okay.
But maybe even 2 million. But that's like where you're looking at the EBITDA. I like to call it like the cusp, the break point. There is a break point, and you look at this with online companies and you look at with offline companies, there's a break point in the EBITDA where the valuation goes up significantly. So once you start pulling in 750,000, $1 million in EBITDA a year, your valuation can go from 3 times to 4 to 7 times.
Oh, wow.
So a lot of times you can buy a business that's on the cusp of that, which has a lot more meat on the bone. And all you have to do is get them just above that cusp. And all of a sudden, what you bought at a 3 multiple is now worth a 4 or a 5 or a 6.
That's
So
amazing.
you instantly create value
Mhm.
just by growing the business a small percentage.
Mhm. That's very interesting. That's very interesting. Again, very different than online. Because online right now, I mean, what are some of the financing options that you have for offline? There's significantly more, right?
Absolutely. So, you can get really creative with your deal structures. So
Hmm.
a lot of these companies come with real estate, or they want to sell their real estate separately. They come with actual assets, like you're talking about computers and printers and office equipment, and the real estate, and then the equipment to actually run the business. So there's a lot of things that you can actually get bank financing on that's not goodwill. So it's actual assets that you can finance.
Yeah.
Banks love that because they can actually repossess something.
Hmm.
Whether they're going to get value out of it or not, they love it. So you can bring in an appraiser, and you can get that stuff appraised, and then finance it. There's some really good terms for that. The SBA likes those deals. What I like to do is is if they want to sell their real estate with the company,
Hmm.
I will offer to buy the real estate and the assets, and then they will seller finance the goodwill. So whatever their asking price is minus what the real estate and the equipment is worth,
Got
that
it.
is what I ask them to seller finance. So I'm able to get really good terms on assets, hard assets, and then we'll just finance the rest and then earn out or
Hmm.
whatever. So
Do the banks consider how much seller financing you're getting when they give you a loan, or they purely do it based on the business? And
they will, like those hard assets, they're going to just finance those.
got it.
I don't think they can they can really even take into consideration the goodwill
Hmm.
in those loans. Now, if you get a loan for the whole purchase price of the business, or 75% or 90% of the purchase price of the business, they're going to take into account they're going to require, some banks require that a seller will hold a certain percentage note.
Okay.
So it just really depends on the bank.
Mm-hmm.
They're not very creative. So what I try to do is you can actually do a side. I mean, this is just Sam. So this is not bank speaking, but you can do an agreement with a seller to purchase the business for what the bank will finance, and then you can do a consulting deal, or you can do a side deal with them for financing, and get as creative as you want. Really.
Very good. So where do you find your deals? Is it offline, online? How do you how do you land them?
So right now, the options are so good. I'm actually finding them on the larger business broker sites.
Okay.
I do target ones that are listed by owner. So if you look down, if you're looking at like bizbuysell.com or something like that, and you're going through these listings, if you can find something that looks a little weird, so maybe they listed gross income, cash flow, and then their EBITDA is weird. It doesn't correspond with the cash flow like at all. Yeah. And you start reading through the listing, and you're like, a broker didn't write this. And then you look over at the contact box, and it's just somebody's name and not a brokerage firm or a phone number or anything like that. You might have a live one. So right now, I am talking with an owner of a plumbing company in Texas. And so I found that deal. I was at the water park with my kids, and of course I'm looking at deals, right?
We all do it.
I'm holding my 1.5-year-old in my arm, and I'm scrolling through my phone, and I see just a name and a phone number, and I'm like, oh man, let's jump on this. So I call him, boom, it's his cell phone.
Wow.
And I'm talking to the owner. Man. That's like heaven for a business buyer. So when you start talking to the owner and they've kind of messed up the listing and they kind of don't know their numbers, you're like, ooh, terms. That's all I think. I think terms. So I found them off market too. I have, online contacts who will contact me and be like, hey man, I got a deal. What do you think? And then my online deals, a lot of them I source through ACE and the group. So
got it. Okay. Recommendations for someone who's thinking about getting into this space now. So a lot of the people that I cater to in terms of conversations in this podcast are individuals that are working in a full-time job now, looking to either get a side hustle, completely leave their job and start their own thing, or like us, looking to create larger portfolios and manage a group of businesses. So how does somebody begin? Where do you recommend?
Don't quit your job.
Don't quit your job. Okay.
Don't quit your job, because if you think you're going to be able to buy a business like that, it's not going to happen. Unless you're a minority investor in a business that's about to close. It's going to take a long time. So it took me 6 months to find my first deal.
Wow. Okay.
I was actually interested in. So I've been talking with this guy out of Texas for 4 months, and we haven't even there's no LOI. I don't even have a letter of intent. I don't have an offer. I'm still getting information from him. One of the best deals I ever did was I brokered a business, and it took 10 months to broker that business. And it was 10 months from the time that I found the buyer. So don't quit your job. You can learn this on your lunch break. You can learn this after dinner, after you put the kids to bed. Just don't watch Netflix. Go online and watch how to buy businesses, from people like Ace Chapman and myself. And you know this. You're building a podcast about it. I mean, you can
call me.
Yeah, absolutely. Call either of us, whatever. We'll get in touch with each other. I'm looking forward to doing deals together, and so call Mad Profit. So you can listen on your way to work. I always try to take advantage of the time that I have by leveraging the time to learn. But don't hesitate. So you need to take action. because there's so many businesses and so much opportunity out there. You can get stuck in learn mode. So you definitely need somebody like us, or some, somebody else to help you move along in the process, or push you, because it's a little scary sometimes. So
it is, and there's a lot to learn. And a great point. I mean, I learned this space through Ace's podcast. I was commuting an hour and a half each way, and I sucked in 3 years worth of podcasts in a matter of a couple of months, and it was just
Ron, you're
super
so right, man. You're so right. I mean, and the crazy thing is that like we really give away most of our best stuff. Like it's really what you're lacking is the action,
the experience.
And so you get the knowledge, the head knowledge, and you don't get hung up, here you are taking action, Mad Profit, you're building a brand, and you want to help people buy businesses. You want to buy businesses.
Exactly.
And it's almost like I'm an evangelist, man. It's don't go start businesses. Don't hustle and grind. This is not this. You don't need to do that. If you're going to grind on something that's going to pay you immediately. So grind on looking at deals, grind on doing seller calls, grind on getting financing and building your investor funnel. And that's what you need to grind on. Don't grind on, oh, maybe I should, do I need to put up a website? How do I get my marketing started? That's already been done.
Yeah. It's a great point. The hard work, especially starting something from scratch, it's just not worth it, especially at the failure rate of small businesses. Like, why would you ever do that? And when you do buy a business, don't do the work. Outsource it to people that are much smarter, much better, who's got the equipment and ready to go. So
just pay the money. Just do it.
So I've got a personal question for you. I just have challenges with, as you accumulate more deals, to just keep an eye on everything, right? And try to put reports together just to make sure that I've got signals that are coming to me to let me know when things aren't going great. But I find there's always a deal that needs a lot more attention than I think it does. You've got a number of sites now, a number of businesses that you're running. How do you manage it all? What's the trick?
It's a struggle.
And you have 7 kids. Like, how do you do that?
Yeah. So I don't know that I've figured it out, honestly. So, I take a note out of Ace's playbook, which is I'm looking at hiring some VAs, virtual assistants, to assist me in managing those businesses and doing customer service and things like that, because doing it yourself it just gets overwhelming. And really, if you look at the return on investment on your time, like if I'm returning a client email or a customer service email, when a VA could be doing it, I could be taking that time and putting it toward buying another deal or doing another deal, which is what I'm good at. I'm not the greatest at operating these businesses. I'm really good at doing creative deals. So I don't know that I've figured it out yet, honestly. And it's going to require some management of people, unfortunately. And I think some of the special sauce is finding the right people like VAs that can help you. So I'm sorry, I don't have any
I was looking for the silver bullet. Yeah.
Yeah, man. You know what, man? And if you're, that's why I like to buy businesses that have management teams in place. They're used to putting together reports. They're used to reporting to the owner or the CEO what's going on. And so you don't have to train them to do that. It's just a natural thing.
Yeah.
They just need your vision, and then they go forward. So if it's anything, I would, because it's all about, like, when you start listening to people like Gary Keller, who built the Keller Williams Realty. He talks about your wealth is in your people. So it may be a partner, it may be a CEO or an operational person that you hire, but you need to find somebody to help you run those businesses.
Yeah, there's too much at stake not to do it right.
Right.
So makes sense. resources that you use. You talked about Ace and his podcast. People that are trying to learn, any other resources that you would suggest? Books that have influenced the way you think, something like that?
Yeah. It's more like a personal development book, and it's called Interrupt You
Okay.
by Jay Samit, Samit, who's an amazing joint venture guy. He really no longer invests in businesses. If he comes on to be an advisor, he takes 8% of the company.
Wow.
That's what he's like. Hey, if I'm going to come on and be your advisor and be a partner, I'm taking 8%.
Mm-hmm.
So, I mean, he's responsible for a ton of different stuff. So, Interrupt You is a great book by Jay Samit. I do follow a lot of really down to earth marketers. So people like Tim Bird, BURD from Facebook. Let's see, his site is AdLeaks, ADLEAKS,
Okay.
AdLeaks. Vito Glazers, GLA, I think it's SERS, Vito. He does PR. So these businesses, I like to look for businesses that I can leverage my friends and my acquaintances' skills. So I can offer them equity in the company to come in and help me blow it up, just grow it. I don't need to own 100% of the company. I just want to make money. So I want to make money, and I want to care for the clients. And those two things go together. So let me see, is there anything else? I read a lot of Charlie Munger and Buffett.
Yeah.
There's yes. Oh my goodness, there's a great book, and it may be inspirational for your listeners, and that's The Magic of Mergers, which was rebranded into, like, I think it was $400 million in 10 seconds or something like that. You can look it up, but his name is Meshulam Riklis.
Okay.
Meshulm. Meshulam. No. Yeah. And then Riklis, Riklis, Riklis. And it's about how he grew his businesses through mergers, and was just, he's still alive. He's a billionaire. So anyway, Magic
Perfect.
Mergers and Interrupt You.
Okay, excellent. I'll put those in the show notes. Excellent. Do you want to tell people a little bit about Dealmakers Institute?
Sure. So basically, Dealmakers Institute is an online course that teaches people how to buy businesses, but also how to change their mindset into a deal maker's mindset. And what do I mean by that? I mean being able to creatively think and structure deals so that everybody, from the person across the table from you, to your financer, to your suppliers, are happy. So there's so many deals out there where somebody leaves the table just defeated and crushed. That's not what we're about. Deal making is about making everybody happy. So, and the number one question is, how do I give the person across the table, the seller, what they want? And sometimes what they want is not money. Sometimes what they want is a legacy. Sometimes what they want is security. Sometimes, Ace talked about it last night. He owned a tanning salon, and the lady next door to him at the tanning salon owned a retail clothing business, and he was good friends with her. There was a mutually beneficial. If your tanning bed wasn't ready, they would go over and shop, and if they were shopping, they might come over to the tanning salon. I don't know if anybody tans anymore, but
it worked back then.
Yeah, it was a good business model back then. But he had bought several other more tanning salons, and he hadn't been to that tanning salon in about 30 to 60 days. Pulls up to this tanning salon, and in the window it says "going out of business," and the place is virtually empty. Goes in the tanning salon and says, "What's up next door?" And they said, "Well, the lady's retiring."
Mm-hmm.
So he goes over and he says, "Why? What are you doing?" She said, "Yeah, I've had this store for 20 years and it was time to retire." And he said, "How was the store doing?" She was like, "We were doing great, low six figures, um, selling clothes and accessories." And he said, "Why didn't you sell it?" And she said, "Who'd want to buy my business?"
Mm-hmm.
And it's he was like, "Well, I would have." But really what he could have done was he could have walked over there and given her money for inventory. She wouldn't have had to do this whole going out of business sale and all that kind of stuff. Just given her what she wanted, which was to be done.
Yeah.
She didn't want to cash out huge. She just wanted to sell off all her stuff and be done. All he needed to do was give her a check for the inventory, and then they'd sign over the lease, and boom, he's got a business doing low six figures.
Mm-hmm.
So sometimes what the people on the other side of the table want is not money. They just want to be done. So that's what the deal makers mindset. We teach that. We teach how to source deals offline, off market, how to build your investor funnel, which is what you are doing right now.
Mm-hmm.
You're building your investor funnel through these podcasts.
Absolutely.
Everybody listening, make sure that you put your money in. Do you have the fund yet? Do you have a fund yet? Have you started?
No, so the fund, I'm changing the fund up a little bit, and we're going to focus on Canada first versus US.
Great. Okay.
Do it step by step.
Anybody in Canada who has some money and wants to get into buying businesses, get in touch with Mad Profit and figure out how to get into that fund, because Laurent's going to be doing some amazing stuff. This is how to build your investor funnel, man. This is what we teach. So
look at you. I feel like I need to cut you a check right now.
just cut me in on the deals, man. I'm all about it. So anybody,
open to everybody,
give it to Laurent. He'll invest it in companies. And just so you know, if you're listening to this podcast right now, you're interested in buying businesses, you're interested in Mad Profit. Businesses generally kick off between 20 and 30% every year. Mm-hmm. 20 to 30%. Like, you're lucky if you're getting 1% a month or 0.5% a month consistently. So folks, look into buying businesses with Laurent, and I don't know what his return is, but if you're getting anything above 8%, you're doing great. So anyway.
Very cool. Nice plug. And on the flip side, so Dealmakers Institute, I've worked with Ace for a long time. I've known Sam for a long time. They have a hell of a program. Ace has been doing this for decades, right? So he knows.
20 years, man.
Yeah, it's unbelievable. And he started, I don't know, he was 4. But it's absolutely incredible, the methodology he's put in place. And I like what you said. It's not just about learning how to strike deals, learning to find the next deal, but it's the mental aspect of being ready and taking action, which a lot of people don't do. And I agree with you. The number one thing is to just take action. And I started while having a full-time job on the side 2.5, 3 years ago. And I had to hustle. It wasn't easy, especially at some of the deals that you get into. There's a lot more workload than others. But the amount of learning that you get by putting yourself in there is incredible. So I think you guys have done that very well and the right way. So kudos to you, and look forward to continue to see Dealmakers Institute grow and be part of the calls. And future's bright. Looks great.
Thanks, brother.
Any last comments for entrepreneurs? Anybody like that? Actually, even how do they reach you? What's the best way of them getting in contact with you?
So email me at sam@dealmakersinstitute.com.
Okay.
sam@dealmakersinstitute.com. That's the best way to get through to me right now. Just if you can imagine it, you can do it in this world of business buying. You can be creative. There's so much opportunity out there. Do not limit yourself to just how you buy a house. I'm going to make an offer. I'm going to plop some money down. I'm going to buy the house. That's not how businesses work. So just don't limit yourself. The sky's the limit here, and learn from people like Laurent and how to be creative.
And it's fun as hell.
It's so true, man.
Perfect, Sam.
Keep me psyched.
Excellent. Sam, thank you so much for your time. Appreciate it. Love the advice. Love the direction. I'll put all this stuff in the show notes and look forward to kicking this off. Thank you so much.
Yeah, man.
Thanks, all right. Laurent. Have a great one. Take care.
Thank you for joining us on this episode of the Mad Profit Podcast. We hope you enjoyed the show. Don't forget to subscribe on iTunes, Google Play, or the listening platform of your choice. Also, check us out at madxcapital.com for more useful information and resources to help you achieve your investing, entrepreneurial, and business goals. See you next week on the Mad Profit Podcast.